Let's connect then with Mr. P.R. Somasundaram. He's the Managing Director, India at the World Gold Council. Thank you so much for taking time out. As you just heard my colleague talk about the rush that we're seeing to gold, of course, that's leading to those record highs. At a time like this, when the rest of the globe is looking very tentative on the back of these coronavirus fears, we are seeing investors fleeing to a lot of these safe haven assets such as gold. Do you reckon that after soaring to 7-year highs that there is more room for upside? And what's your assessment of the kind of rush that we've seen to gold?
Well, this is precisely the role gold plays. When there is a lot of uncertainty, people do turn to gold because it is a safe haven asset. We have seen central banks continue to buy. Last 2 years, they've been buying upwards of 650 tons, including Reserve Bank of India. Institutional investors as well, not so much in India and China, but in the rest of the world, have turned to gold. It's a great diversifier. And the returns, as was said in this program, has been pretty decent in the last few years. If you take India itself, last 15 years, gold has returned about 9% return. So it is quite comparable. And to your question whether there is room, it looks like there is certainly a lot of momentum that is there in this price rally. But we also have to be cautious that quite a lot of what's happening now is also to do with an anxiety. So as and when clarity emerges, you will not have the same momentum there. So and that's the beauty of gold. It is also, interest rates play a part, strategic factors, and also, certain short-term anxieties.
Somasundaram, just wondering that this spike in gold sure has been a knee-jerk reaction, but it can't be solely put on what's happening with the coronavirus, because that's only a 2-month-old phenomena. We've seen gold prices escalate for the last almost 6 months now. So clearly it seems that there is a rush towards safer haven assets, gold being, a key candidate amongst that. Where do you see gold prices headed in the near term?
As you know, we don't forecast prices, but let me tell you, you made a valid point there. It's not just on the recent coronavirus issue. If you see, it started moving up from July last year. Primarily, it is driven by the US interest rate scenario, which a couple of few quarters ago, we were thinking there were going to be rate increases, and there has been a 180-degree change since then. That added the biggest momentum to gold prices. And then the issues about the global growth scenarios came in, and central bank buying also added to the the momentum again. And these were the various factors that have contributed to this rally. Of course, as I said, the recent anxieties have added to this, but they are not the only reason. It's not, there are several factors which are fundamentally in favor of gold. And primarily, it is the US interest rate scenario. The amount of sovereign debt, which is in the negative yield territory, touched 16 trillion, and now the estimates are around $12 trillion. So that again makes it easier for people to put it in gold rather than put it in these instruments. So a lot of factors which are structural in nature are favoring gold price rally. It is not just this news about coronavirus, which is, as you rightly said, it's just a very recent phenomenon, and it may not even hold out in the long term.
Okay, fair enough. That's the overall backdrop when it comes to gold prices. But there is also a perception that now the aggressive policy easing measures taken by China, that as well, shoring up the economy, will limit the upside for gold. What's your sense on that, as well as what you expect that the US Federal Reserve will do in terms of interest rates?
Well, there is already one more rate cut factored, so that probably is already factored into the price. But it's not just about the virus. The virus is the impact of the virus will be that there will be low growth, global growth, and that is what is making people move to gold. And that the loss that we have incurred is not going to disappear. It is not that, and it will take quite a few quarters, if at all, to catch up. So to that extent, some of what we have seen, some of the rally will remain. But where it goes from here, as I said, we don't forecast prices, but as we look at the factors that are driving the price up, I don't see any short-term reversal of these factors.
The final question then, we've not seen gold very active in the last few years. Given what we're seeing now and given all the bullish commentary coming in, how soon and how to what extent do you see gold moving, let's say in the next few months or year or so?
The Indian demand is driven mostly by weddings, and jewelry demand is about 80-85%. I don't think you can take that away, totally, no matter what the price is. Certainly, people will phase out their buying, but you can't remove that. The important thing is we will see, a slowdown immediately, because the consumer demand does get affected. Last year, for instance, if you see, the ETF inflows were the highest, 400 tons. But if you see consumer demand across India and China, they were both lower. China was down 15%, India was down 9% in volume terms. But in value terms, you still saw a growth. India invested more than 3% in value terms in gold, but they got less gold because the price was higher. So that is the trend you will see. The volume, there will be, these price increases are headwinds for the consumers in the short run, but this demand doesn't disappear, because this has a lot of cultural and other factors as well. The one good thing we could do probably is to look at the rise that we have got and see whether we could develop the investment side of the market in India, which is very, very underdeveloped, because then you have gold in circulation, which is what the government wants.
For joining us and sharing with us your outlook on gold prices, as well as how you're looking at the overall safe haven demand.